When you look at Jay Powell and when you look at what we heard so far, he's pretty optimistic about the U.S. growth. Are we in danger of overheating?
I don't think we're in danger of overheating just yet. I mean, the Fed's already on a hiking cycle to cool that overheating. So of all the central banks globally, they are furthest along that way. What does surprise me is how positive he was on most of the growth backdrop, the economics of it, and the points he made in his previous testimony about how the tax plan and the spending plan wasn't really in their projections and even in their discussion in January. That's what made the market go, this was really hawkish versus what they expected. What to expect from today's testimonies will be very similar. So typically when Janet Yellen has done this in the past, there's very little difference between the two different testimonies. So I'm not expecting too much of a move today.
OK, so what does dollar do from here?
So I think in the short term, you're seeing what we're seeing on the dollar smile is a bit of outperformance on the dollar. And that's thanks to people trying to price in more hikes. It's amazing how far we've shifted. So we were talking about 4 hikes over the rest of the cycle and then stopping. Now it's 6 in our view. And I think the market's getting there too. The market's pretty much pricing 4 already. So 150 basis points of hikes over the next 18 months. The market's pricing around 103, 105. So you've only got a little bit extra to play for, and you've got risks of the data turning, something happening globally, such as in China, a slowdown. So I think the US dollar curve is fairly well priced on the front end. It's in the back end that matters now. So do we get more term premium? The answer is yes. We think 10-year Treasury should go above 3 to 3.25.